What we're going to do today is invite some of the most successful limited partners from our inaugural LP Institute program on stage to talk about their experiences in the program, what they're seeing in the market today, and things that are happening that anyone who's a limited partner should know about, anyone who's a general partner should know about, and even entrepreneurs might be interested in. So why don't we call our first panelist on stage? Can we? Awesome. And as they turn their the cameras on, hey guys, good to see you.
Hey Dale.
Thanks for making some time today. So why don't we take a moment and have each of you introduce yourselves, and then I've got some exciting questions for you. So Dimitri, we've had the pleasure of working together a bit. I think you're awesome. Why don't you go first, then we'll turn it over to Maxime.
Sure. Thank you, Adeo, for inviting me and recognizing me. It's really been a fun ride, and I appreciate everybody here and the opportunity to be part of the first cohort of the LP Institute. To kind of give you a 2-minute overview of how I got here today, in 2010, I founded a CRM system, which was a SaaS, specifically for the payment processing industry. You can think of it like Salesforce on steroids for the payment processing industry specifically. And then I sold that at the end of 2021 at the height of valuations to private equity. Insight Partners, Francisco Partners, and Great Hill Partners were all basically the folks that acquired that. And since then, I have been on a path of continuous learning to become a professional investor into specifically AI-focused companies. And as somebody who is not in any way, shape, or form originally from the traditional finance industry, I had to start my education journey from the very beginning. And, you know, like I said, without a formal education in the finance industry, everything that I learned just came from purely the limited amount of experience that I have directly from running my business and a few college classes that I took almost 20 years ago. So everything that I knew about finance was basically just learned on the fly as a business operator. And then I quickly came to the realization that these skills are not enough to become a professional investor, maybe a hobbyist at best. So I essentially had to realize that I'm starting from zero. This is where the LP Institute came in. And, you know, this is in addition to other investments that I have in private credit, equities, fixed income, private credit, public BDCs, overall, where the VC aspect is where I see a lot of growth potential. So this is where I think the LP Institute taught me a lot.
Well, thank you very much. And would you look at yourself as a family office just to get some further context?
Yeah, I'm part of a multifamily office, and I'm managing and investing my family's capital.
Excellent. Thank you for the intro. Let's turn it over to you, Maxime, and then I have some questions for both of you. If you don't mind doing an introduction of yourself.
Sure. Thanks, Adele. Great story, Dimitri. So I'm, as many people in the VC space, started as an IT person, did PhD, worked for Google. Then I was lucky enough to join currently it's very successful cryptocurrency company as a first employee, and eventually as an executive. And as part of this organization, I besides doing like tech and product, I was also screening various projects for potential grants. As you might know, in crypto space, it's quite popular for very large organizations to run pretty massive grant program that sometimes go up to hundreds of millions of dollars. And so when I stopped working for this organization, I just decided to continue doing something similar, but for myself, meaning investing into projects. However, unlike many other people in my space who would become angel investors and would try to invest into the startups directly, I figured out that I don't have enough experience, or I don't want to commit this much time to invest into the startups, because in order for the numbers to work when you are an angel investor, you really need to invest into a lot of startups for the power law to kick in and to have a large enough sample to actually catch this one unicorn or many good or moderate exits. So my compromise was investing into the emerging funds, which also helps a lot with the networking, because you get a lot of the exposure. The GPs are working really hard there, and they're very negotiable and eager to work with. And I really wanted to keep in touch with the tech ecosystem while investing into the funds. So that's my story. I ended up in this program because I realized that I know nothing about the space, and especially, as Adele said, emerging funds are trickier because there's a lot of the qualitative data that you just don't know. There's a lot of know-hows that like nothing has been written about on the internet about this kind of stuff. And so this program was invaluable for me because I just learned all of the needed know-hows directly from people who've been actually helping the emerging funds to get started.
Thank you. So we got applause. By the way, okay, so some Robert's Rules of Order now that we're midway through. There's some emojis at the bottom. Emoji away if you like what, there we go, if you like what people are saying. You're also going to see a little chat bubble and a Q&A bubble. You can introduce yourselves in the chat bubble, and then if you have questions that we want to get on stage, add it to the Q&A button area, and I will bring your questions on stage as well. Okay, so I really thank you for those great intros and those kind words. You know, I'm going to be I have lots of questions for you, but I'm going to be a little self-started. What do you think of the program? Did you like it? Was it good? Was it, who wants to take it first? Maybe we go Maxime, since you went last, you go first this time.
Sure, absolutely. I just was so lucky to discover this program because, as I said, the amount of the know-how and the knowledge that's just like not written anywhere is enormous for someone who is new to investing into the funds. And I was happy to see this program giving mic to some very, very experienced investors and who would just info dump at you for an hour. That was invaluable, and I am a compulsive note taker, so I wrote down everything they said. A lot of this information is very subjective, and many of these numbers have very wide ranges, but without this, you're basically blind as you're trying to invest into emerging funds. This probably is the only way to really calibrate yourself without doing first a lot of the mistakes and learning by doing. So this program gives you a bit leg up.
Yeah, and some of the mentors said conflicting things, right? They would say like, "Oh, references don't matter. Oh, references do matter." They were definitely, for the most part, that didn't happen too much, but it definitely happened more than I expected. Dimitri, what are your thoughts? And then I got some other questions for you.
Sure. So definitely agree with Maxime and the last point that he made as far as learning through doing. I think that was one of the big advantages of the program, that it's not just theory in any way, shape, or form. You are literally walking people through the entire process, which I've kind of made a mental funnel to myself, from sourcing to qualifying to evaluating to verifying to closing, and all of the little compartments that go into that. So just learning theory wouldn't have been enough without the speakers and the homework took just as many hours as the actual sessions. And my wife was always, "Hey, what are you doing? I thought you're done with that." I'm like, "No, this is super important. I'm having those aha moments, which are so rare, and that's kind of what I live for." So I feel like this was a 2 × 2 = 8 type of scenario where I literally started from zero, and I've learned some of the mistakes of what not to do, kind of what Maxim said, at the end of the program. So I think I'm super grateful to be part of this.
So okay, let's talk about some of the learnings, right? Because I think you brought up the subjective side, right? And Maxime, you were talking about the info dumping. So let's start with you, Dimitri. What were, like, if you could give like 1 or 2, maybe 3 takeaways you had that was like you didn't even realize before the program?
Exactly. So I'll talk about the things that are not obvious, not logical in any way, shape, or form, that were like true learnings from 0 to 1 for me. So First of all, starting at the top, it's really important to understand the fund's expertise and thesis before you invest in it. It seems like common sense. So what does that mean? Everything revolves around the manager. So pinpointing for yourself and understanding what gives that fund manager the right to be able to pick winners within the sector that they specialize in is really important. Also, what are going to be some of the concentration of per deal limits of the fund's total capacity that they intend to put into a specific deal within the fund? Are there any warehouse deals? So those are deals that the manager might have made before they started the fund's inception that they are gonna kind of roll up into the fund to give you exposure into some certain deals. Are there side letters, which are basically one-off agreements between an LP as an investor and the fund, which are not advertised? And if you ask the questions, you might actually be able to get certain benefits that you didn't know if you didn't ask. And then also, most importantly for me, one of the trends that I find as a differentiator is, are these fund managers essentially operators themselves and business folks first before they became fund managers, to show that they've had skin in the game, that they understand the corporate process, that they've ran a business, especially if they worked in corporate development and or have had exits of companies that they started themselves. All of these things indicate for me that people can be good at sourcing, picking, and choosing winners in the entrepreneurs into which they want to invest. Those are just a few of the examples, Adeo.
Oh, that's all. Those were all great. I was just like, amazing. Maxime, you want to go? Any lessons that you took away that were?
Yeah, absolutely. What was really mind blowing to me is I would call it negotiation, but more like a conversation part with the managers, because your position and your leverage changes based on the check size that is currently in question, and it changes very drastically. So you can basically have a separate course for like $100,000 check, a $250,000 check, and all the way to like $1 million, $5 million. It's a completely different story, different game, different questions, different things you can ask from them, and they see you completely differently. And understanding where you stand is crucial, because if you come in for $100,000 check as if you're investing $500,000, you will ruin the conversation. And you will misinterpret some of the signals. You will think some of the, green flags are red flags. This is very valuable, and that was mind-blowing to me. Also, some of the qualitative things that it comes to assessing whether the managers might be overextending themselves, because we are invested in ambitious people, people who set really high goals for themselves, understanding what is the number of companies that a single partner can reasonably source and invest in a year is a difference between betting on someone pragmatic versus someone who is very wishful. And this is also incredibly important for making the right investment decisions. Yeah, and one thing that I would mention, without giving like specific detail, is unknown unknowns, things that you didn't even think about thinking before joining this program, and someone like Marco Hara will just info dump on you for a couple of hours is incredibly invaluable to me.
So that's interesting. You brought up, I have questions for you, but I have questions for you on the list, and I have questions for you off the list. But let's follow. One of the questions on the list is like, did you have any favorite mentors or any, favorite people that you got info dumped on? Why don't we start with you, Maxime? You brought up Marco. Marco, I love Marco, but
Yeah, absolutely. As I said, like I would just give Marco a mic and let him talk, every day or like once a week for like 10 episodes, and I would just take notes on that. And again, it's not just
for reference, Marco is one of the organizers of the program with Mike Supervici and I, and Marco Hara is his name, and he's done over almost 300 emerging manager investments. So he's truly like the godfather of emerging manager investments. Sorry, Maxime, back to you.
Yeah, and for those of you who don't know, you need to understand that when there are different types of LPs investing into the fund. Some of them, like fund of funds like Decile, they do very deep due diligence on the fund. So when you talk to Marco, you're talking to someone who basically x-rayed a fund and they know everything about it. And this is completely different to someone who would be like an LP like myself, who did some kind of due diligence on the fund, but definitely didn't talk to every single company on their portfolio, or did even deeper. So it is very important to discuss with market-specific funds as well, because it helps you calibrate yourself immensely.
Dimitri, any favorite mentors?
Yeah, I would definitely second Marco. I have probably two and a half pages of just notes from the one-on-one sessions and various learnings from Marco. Definitely an encyclopedia of really, I would say, distilled and pinpointed information. So definitely huge takeaways. I also enjoyed hearing Barry Eggers, the founder of Lightspeed Ventures, speak. Even though he's more on the established fund side, it's still really good to get perspective of somebody that has been through multiple cycles and really see how things have evolved in the VC industry, you can say. But you guys have really had a deep bench of expertise, even from the family office to the treasury folks. I have pages of different notes overall. So it's really the gamut of legal and compliance, the sales and execution side, and the due diligence side. So really, I feel like you had the full 360-degree view of what it takes to play in the VC space. So good job.
Yeah, I appreciate that. Barry was incredible because he talked about the other side, right? So they've built a firm that's raised multi-billion-dollar fund series, right? Up there with Andreessen and others, Lightspeed. And he talked about how he built that organization, how he treats LPs. And it's like, whoa. So that's the gold standard. New and emerging managers, not so much. Maybe actually, without naming names, since we're talking about that, do you have any funny anecdotes of firsthand experience you had with GPs in the program that were like aha moments for you? Like, oh, I didn't expect this, but now I learned something here. I don't know who wants to go first on that. Maybe you unmute and I'll call you. So any learning moments with Dimitri? I see you unmuted.
Sure.
First.
Yeah, I'll go first. So, I mean, really everything comes down to, with an emerging manager, of getting a lot of no's out of the way. So I feel like the faster you can get through the no's, you start understanding who you are compatible with, because this is essentially a relationship that you might have for 15 years. So everybody has a different personality type, and the mesh has to be there. So the ability to trust someone, the ability to follow their track record, seeing, even though let's say you introduced us to 10 managers, the conversations were so wide and vast that for me to narrow down into my 2 finalists, it really took connecting with them, having maybe 20 conversations, literally. I'm sure Marco would appreciate that. Having a face-to-face with one of the fund managers to really understand how he thinks and talks, and like really what has gotten him to that point today. So I would say that it's really understanding the personality, so that are you able to be friends with somebody for a long time and be able to mesh with them? So I get a lot of no's help to filter you to that point of a yes.
Such a good answer. Maxime, any kind of surprises in the GP interviews or realizations?
Yeah, one big aha moment, as you said, was to me when I came across a fund manager who wasn't just a person who wanted to start a fund. Because I feel like a lot of fund managers, they become fund managers because they have friends who are successful, or they that's like trendy, or they think they're good at it. But once I came across 1 or 2 managers who started a fund because this was really the most logical step for them to do, because they were doing something before starting a fund, which was almost lending itself to becoming the fund manager. That's when I saw like the most, I would say, organic possible fund manager, and I realized this is what I aspire to invest into. I'm really interested now in the fund managers who almost unwillingly became fund managers, as opposed to someone who, basically constructed a fund around their wishes and aspirations.
That's awesome. Wow. All right. One last question for you, and we'll jump on the next panel. So I know you mentioned AI, Dimitri, you mentioned crypto, Maxime, but quick areas of interest right now and why? Just a quick last question for you. Maybe Maxime, you want to go first?
Yeah, crypto, when I started in crypto about 7 years ago, that was one of the emerging technologies, very promising, a lot of uncertainty, and it was also around the crypto winter time. So I just really wanted to do some crazy project, and that's really paid off. And really no other reason. I really wanted to do something completely crazy, something that challenges things as much as possible, but feasible at the same time. And I was lucky enough to pick the right organization to join. So yeah.
Yeah, so
Dimitri?
I would say AI focused in any industry overall, anything that is doing vertical software integration. Perhaps if it has an e-commerce component to it, could also be interested in that. But I see that there's a lot of uncharted territory in a variety of industries that AI can disrupt. So it's sky's the limit.
Amazing. Thank you guys so much. Let's see a big round of emoji applause and let's call our next panelists on stage. Now I'm excited to be talking with you guys, two of my favorite people. Why don't we do ladies first here and have Alexandra introduce herself and then Gary. I mean, you guys are amazing. Alexandra, floor is yours.
Hi, Adele. Very exciting session so far. So great to see everybody again. Yes, I really enjoyed the program. I'm not new to the industry per se. I've been in development finance for over 16 years in different private sector, public sector now, international finance cooperation. Specifically, right now I'm in the blended finance area where we would use blended concessional finance to use essentially alongside DeFi capital, IFC zone capital to de-risk projects in emerging markets. We invest in a range of companies and funds and financial institutions, you name it. But what was new to me is coming into the space as an individual investor. I've done angel investing. I regularly talk to startups and entrepreneurs, but lately came to the realization that it's becoming harder and harder just because of the sheer scale of how many companies you really need to go through and do a due diligence on to make it in your portfolio, right? So that you can construct your portfolio in a meaningful manner. And so I started looking into investing in funds, and I came across this program, which was an amazing discovery. I'm really glad I participated. So much to share, but I'm gonna stop here and maybe over to Gary.
So what the acronym for International Finance Corporation is IFC, which is what everybody probably, not everybody, a lot of people know what that is. One of the top funding organizations in the world for really lifting up developing ecosystems. It's part of the World Bank, correct, Alexandra?
It's a private sector arm of the World Bank Group, yes.
Yeah, so so she comes from an extensive background professionally, and then really was like, how do I do this personally? And you're the second person to bring up as a means to diversify your portfolio as angel investing. Gary, why don't you do an introduction and then we'll dive into some questions.
Sure. So, I've kind of come from the opposite side of this. I've spent 25 years as an engineer and engineering leader, big companies, small companies, Cisco, Google, VMware, Broadcom, a couple of startups. I've been an engineer, a manager, first hire after the founders, VP of engineering. And now it's kind of as I move into the next part of my career, what to do next. And I want to stay close to tech and I want to stay close to founders. And I like working with people working on new stuff. So, I got involved with VC Lab, with Adeo to try to, build my network, find more of those companies, see more of those deals. For the last 2 or 3 years, I've been doing, individual angel investing and now started getting into sort of LP investing. And I'd done a couple, I'd met a bunch of GPs through VC Lab. And, then when the program came along, it was like, okay, now that I've potentially made some very, for me, significant investments without some knowledge, maybe I should learn how to do this for real. And now, this was an opportunity to sort of learn, the rules of the road and what to look out for and what's typical and what's not. And, what's a red flag and what's a green flag, and how to do this more rigorously, so that hopefully as I get more into it, I'll have more success with it, and that will give me bigger network, which of course meeting the rest of the people in the cohort was even just as much of a benefit as the learning experience itself.
Thank you very much for that. So okay, you guys have both done angel invest. So I'm going off script here because of your intros and Alan, by the way. So you guys have both done some angel investing and maybe up leveled it to doing some venture investing. And maybe you could, who will maybe put a finger up first, go first. How do you view your angel and GP investing, and why did you up level, so to speak, to GP investing? I'd love to hear your thoughts on that, because it was also brought up in the last panel. I see you nod, Gary. So that, Alexandra, your finger was up first.
Ladies first.
No, I just realized that my investment strategy has been very unstructured, and I just found myself talking to entrepreneurs, come to the different angel investor networks, doing random due diligence, random companies, random topics, which I really do enjoy doing, but I think at some point you run into the limitations. And at some point you start thinking about, okay, how do I structure really my investment strategy outside of the traditional, stock market and real estate, right? And this is where it all started, really. And I think throughout this program, so I came with no investment thesis for investing into the fund managers. And I came with zero network, not zero network, but I guess limited network in terms of the deal flow, right? The pipeline of deal flow and the network among the LPs and GPs in the United States, because most of my exposure has been internationally, as you can imagine, working for international finance corporations. So it's Africa, Latin America, Asia, you name it, but not so much here. And because of the conflict of interest, I cannot be investing in emerging markets. So I was left with no choice. So that's really how it all started, and the program really helps. I think the biggest takeaway is really sharpen and narrow down what really is my investment thesis and what is it I'm looking for when I'm talking to companies and when I'm talking to GPs. These were the major takeaways. But I mean, I'm happy to go into the detail, but I want to let Gary step in here.
And I have a question about something you brought up, but I'll ask it to both of you. Gary, so what, up leveling a little bit, tell us about your experience. Thoughts.
Yeah, and I mean, as I said, my whole point in getting into investing, I've always been an investor from since I was 18, investing in all sorts of things. So I like the investment side of stuff, and this was another avenue. But realistically, the angel investing was an opportunity to stay close to founders, and then the GP, the venture investing was how to take that and have access to 10, 20, 40 times as many founders in many different areas, and talking, to many different funds. There's only so many people in angel groups or whatever that I can meet. This builds my network quicker. This, puts you in front of more deals that you wouldn't necessarily see. And part of my investment thesis is finding GPs who value my expertise and have portfolio companies that would, benefit from what I've done. So, being able to find an order of magnitude more opportunities like that, is part of the reason for doing this.
And you're kind of a blended hardware software engineer, which is also a pretty awesome spectrum of skills. Okay, you both brought up networking. Okay. So I'd love to hear why and how networking was helpful for you in this program, and have you formed networks that you're going to now use going on? I'd love to hear, because you're both award winners. By the way, all the people featured, all the limited partners featured here today were award winners in the program for various reasons. So do we want to do ladies first again, Gary? Okay,
Certainly.
so Alexander, you brought up networking. So yeah, tell me about how the programs help you with networking, how you plan to use it going forward, and anything else you want to share on the networking side.
It's been amazing, really, from so many different angles. The sessions themselves, because you can always connect with whoever was invited to speak to one of the sessions. We had office hours. Adele, Marco, Mike. It's been great talking to you individually and really learning firsthand, but as well as all our individual groups. We were split into individual groups and we had our networking sessions every week. But then I think, I don't know, I haven't quite counted, but I think 50 is probably the minimum number of calls that I've had over the last couple of months, just based on the program. But also, of course, these 10 funds, right, that you haven't introduced, that's your pipeline, right in and there, right? These were all the starting conversations that led to new conversations that led to personal invitations, depending where the fund managers were based. I'm based in Washington, D.C. I got invited to a few, for example, meeting of a syndicate. One of the funds had a chance to in person see how the discussion is happening. They were inviting companies were presenting, and how the syndicate was looking, actually see it live, right? How the syndicate was looking at each and every investment and whether to accept them or not. Meeting in person has been great. I wish over the last couple of months I had more opportunity to travel because of work and other circumstances. I couldn't, like in New York, right? I think many people in our cohort were from New York and from California. I wish I could go, but it's still in the plans. And I'm sure though you're planning more in-person sessions, those are really valuable to me. I guess that's one takeaway. Any in-person meeting is extremely valuable, right? Or when the GPs invite you to events where they speak or present, or when the companies present, that's that as well. And I think as a result of all this conversations, individual, group, etc., we've had, I think now it became sort of it's on a rolling basis now. I can continue, but it's kind of happening on its own. You know, I have people reaching out, asking for references, asking about the companies from GPs and from other people in the cohort. So it's been a great jump start. I think this program is amazing, depending on where you are starting from zero or even not ground zero. But yeah, it's a great jump start.
Well, thank you. And you just inspired me with what you just said. I should start collecting officially events. So I had an event to something in Half Moon Bay. I passed out to some people, but we should just start collecting these cool GPLP or LP only events. There's a lot of crappy events out there for sure. Like, oh, Sir Rothschild's blankety blank. It's all BS. But they're actually really good events as well. So I think it's a great idea to get an event calendar of the good events. Gary, how is the networking and social side for you?
Well, I think it's funny. You know, I was expecting Alexandra to mention it, but even like we had, we were put into a cohort based on sort of size, and our cohort, even after the event, has continued a WhatsApp group where we're sharing information and continuing to do sort of diligence on different funds. And the fund that I ended up investing in and doing my whole process through the cohort came through a recommendation from another LP in the program. I didn't actually end up investing in one of the 10 that was kind of initially put in front of us. But even those 10, I ended up doing in-person LP dinners. The one session which we should do more of, where we did the sort of LP speed dating event, was good because you got to meet people outside of your cohort. The one event at your house was great. Again, just walking around and being able to, oh, you need to meet this person and you need to talk to that person, and being connected and being a connector for other people was really again, half as much the value of the program as the individual sort of prompted learning sessions.
I'm hearing from you both more in-person events. Is that a thumbs up? Can I see? Yeah. Is that?
Yeah. Yeah.
Yeah. That was super fun. We had people over to my house. Gary was there. Gary was super popular. Actually, it's a nice time of year. I'm going to take that feedback. So lots of great feedback. Directory of events from Alexandra, more in-person events, and that speed dating was really great.
It's an in-joke with Adeo and I, but you still owe us a boat cruise.
I do owe you a boat cruise. I won this thing. Yep. Okay. And the prize was a boat cruise. And I'll just do a boat cruise for everyone. And now is the time to do it before the summer gets cold. So actually, all right, Gary, challenge accepted. Both of you brought up deal flow. Let's just dive into that for a second. Talk to me about how you've grown your deal flow, how you think about deal flow right now, and anything you want to talk about on deal flow, because obviously if you're investing in new and emerging managers and you have no deal flow, that can't happen, right? So we can continue Gary, do you want to go? Okay, ladies
Sure.
first. You are polite and a gentleman. Thank you, Gary. All right, Alexandra.
No, I was going to say either way, but happy to start. So I think for me, deal flow now comes from a few different places. As Gary mentioned, we continue the group, and I think it's very important to have this weekly touch base where we continue bringing deal flow to each other, right? Because as we continue talking more and more fund managers, I think the biggest part for me was realizing, again, the things I look at from the investment thesis perspective, and also from the perspective of when I talk to the managers. For me, it's really I guess maybe it's limiting in some ways, but I do look into specific themes such as sustainability focused areas, right? Climate tech, ag tech, fintech, and that kind of almost actually helps to narrow down the number of managers I talk to. But then even from there, I ask those managers that I talk to, I ask them for references to the funds that operate in a similar area. It's very also interesting way to sort of see how they react, who do they have in their network. I get interesting references that way. Everybody in the cohort, we have a LinkedIn group. We reach out to each other individually. That's an amazing source of deal flow, but also colleagues outside of cohort as well, right? But yeah, I guess those are probably.
By the way, I love asking managers. And as an aside, I'm looking in the chat here, and I recognize some great managers, including great female managers. I see that Karen Sheffield's here. Hi, Karen. You're awesome in the audience. And Jessica Carr, two female managers. There are not enough female managers in the world. As an aside on male-female ratios, the entire largest group of limited partners in the LP Institute was all women. That's crazy in a good way, right? Isn't that awesome? So we're seeing women at the top. We're seeing more women in the middle, and now we need more women as entrepreneurs as well. And the women GPs being in the middle. So the top being LPs, middle being GPs, and then entrepreneurs at the bottom. And that's also by volume. There's less limited partners, more GPs, and a lot more entrepreneurs. Gary, talk to us about volume of
sure. And before I do that, I'll give the shout out and second your comment. Karen is awesome. But yeah, I mean, I think it was very interesting. I went from a position of wanting to build that network and wanting to see more to, you know, the kind of comment that everyone made. If you put enough stuff on LinkedIn that says you're an investor, people come to you. So now there's, you know, there is a sort of a position now where there's, you know, 2 or 3 a day that will send you something and want to connect and want to talk to you. So I don't know that pure deal flow is necessarily a problem. Now it is, as Alexandra said, filtering down to what you want. One of the lessons in the LP Institute was, GPs especially want to get to a yes or a no, and especially to a no as quickly as possible, and being polite and respectful in your no's. And part of this now is figuring out, how do I get to a yes or a no quickly? And as Alexandra said, there are themes that interest me. As you said, I'm a hardware software guy, so space tech and security and IoT and those kinds of things are kind of interested because they're expertise that I have. Edge compute and infrastructure and things are areas where I can contribute. So in some ways, like you asked about how you evaluate opportunities, some of it is coming from an angel perspective where I was looking at individual companies. Emerging managers, as you said, is very subjective and looking at the manager, and part of it is can I envision this person viewing the companies they would invest in the same way that I would view them as an angel. Do they have a similar perspective to me? Over the 10 years, are they going to make the kinds of decisions that for the most part I would agree with? So there's definitely been a refinement of my thesis of what I'm looking for, and how I get to a no, and then politely let them know that, so we can move through the list of people that come. But I don't think finding deal flow has been a problem over the last 8 or 9 weeks. Finding the deal flow you want, and the events have been helpful there also, in terms of talking to somebody and saying, this is what I'm looking for, and they're like, well, that's not me, but you should talk to that person, and being introduced to the right people and being routed to opportunities that are closer to your thesis by the community.
Let's talk. Let me double click on that, because this is something noting that there's GPs and LPs in the audience, as well as some entrepreneurs, but I'll just focus on the GP LP side for a second. So you have dealt with a lot of GPs and had interactions with them, and sometimes it can be like great synergy, and sometimes it's like two ships passing in the night, right? So what are some tips that you could give GPs on, hey, if you did this, meetings would go a lot better, and I could give you an answer faster if it's yes or no, right? So what are some things, universal tips for GPs to pitch more efficiently? Okay, Alexander, let's go with you first.
Oh, Michael. I think just one perhaps thing to mention here, it's not just during the meeting. I think now I have come up with a list of red flags that is everything outside of the pitch, which to me actually are more important than the pitch itself. Because one pitch, especially the first meeting, you're only going to go through many different things. It's the in between the first and the second and the third. These are all the things that are happening in that space that really matter the most. So one is proactive communications, right? Is after the first meeting, I would see some GPs starting to following up, asking where is my thinking, sending some updates about the companies that, for example, what's happening in the companies that they already invested in, or the new companies that they're thinking on. The outstanding DPs so far have reached out and asked me for my opinion or anything I could share or give references for particular companies. And again, that goes back to the thesis of why I'm looking into these topics, because I want to bring the value as well. And when GP is realizing that I can bring the value, they need to understand how they can tap into me and my network, into knowledge and resources and so on and so forth. So I'm looking for this sort of I guess it's the combination of communication, but also ability to build the pipeline and leverage really everybody that they have, including LPs and their network, to the maximum, right? Invitations like I received from one of the managers to actual meeting where I can sit and hear how the discussion is going, what kind of questions have been asked, and so on and so forth. One interesting conversation to me was, now that I'm actually embedding it more and more into subsequent conversation, is when they say they specialize in particular industry, let's say climate tech, right? I'm also on a day-to-day basis looking at all the climate companies in the space, international or national, or you name it, right? If I bring up a name of a company and the LP says, oh yes, we've already looked into this, we have done this and this and this and that, to me, that's a great sign that, A, they know what they're talking about. Or if not, I would be asking for questions. Yes, can we learn more about it? Can you make an introduction? And so on. Yeah, and I guess also the vision, I think not just beyond the immediate fund that they are building, but more longer term, where they want to be, how they're thinking about the follow-on funds, are they planning to do. I think that came up in the first session already, whether they're planning follow-on funds. That to me is very important, because I also want to be with the GP in a longer term in the journey. I don't want to be, do one fund and then, and
Not one and done.
I'm looking for people who are passionate about the industries. If they're talking about climate tech or ag tech, I want to hear this passion. I want to see it in the knowledge and how they talk about it, and deep expertise in this areas.
Gary, you anything that you could suggest to make that more efficient and effective?
Yeah, I mean, a few things. One of the big themes from the LP Institute was the fact that, when you're working with with a GP, it's a 10 to 12 year relationship. So part of it is understanding how that relationship goes. So as Alexandra said, good GPs followed up and said, by the way, here's the recording of my last LP meeting. Here's the last LP update I sent. Here's the cadence that I send updates at. Here's the kind of communication you can expect. I run, portfolio meetings where you get to meet my portfolio companies and talk to them and find out what they need. I do a dinner every quarter or every half year or whatever. So tell me up front how you're going to manage the relationship that we are building after you get my check. And the other thing is, learn about what it is that I want out of the relationship. So as I said, I'm more interested in being actively involved where some people are not. So if that's not something you're open to, don't just say it because you want to check. If you don't mean it, both of us, it should be a no. So be open and honest about what you want from your LPs, figure out what I want from the funds I'm in, and figure out if that's a match between the two of us. The other thing that I was looking for, Alexandra talked about evidence of expertise. I'm also looking at this as evidence of passion. If this is a day job versus a mission. And, the fund that I ended up, investing in as part of the LP thing, that was something very personal to them and actually a mission that I believe in. So for a certain way, both of us are aligned in why we think that's a useful thing to spend 10 years of your life involved in.
Thank you, guys. By the way, thank you so much, Gary. Thank you, Alexandra. We're running up on time here, and I want to be sensitive. Just congratulations to everyone in the LP Institute that finished the program. I just want to say it was such a joy and such an honor to be part of this first cohort, and we're obviously going to continue it because it did so well. There's one last question here I'll answer, like what was the distribution of people across the different sizes of LPs? So again, we had 10 million and above, we had 5 to 10 million, 1 to 5 million, and below $1 million. And there were roughly equal number of participants in the program for each of those buckets. And we're doing intake on cohort 2, and it's looking to be that way as well. And I just, again, want to congratulate everyone in the first cohort. We're going to do all the advice you suggested here and continue to engage with you in different ways. Launch new cohorts of the LP Institute. Make sure that you have opportunities to network with the new LPs coming in to grow your networks and just continue this amazing program. Thank you, everyone, for being here. Thank you, Gary. Thank you, Alexandra. Big love all around. This was amazing. Thanks, guys.